Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be going over the top 5 stocks that you should be investing in for the long term. It's been about a week and a half, 2 weeks and a half since I made my last video here on this channel, and I could not be more excited to be back here in the studio making videos for you guys once again. For all you got workhorse apes, we're going to be releasing a big updated detailed video on that one later, but today we're just going to be going over the top 5 stocks to invest in for the long term as of August 2021. Now guys, if you would like to join our Discord community, the link is in the description or in the pinned comment section, and you can join our community where we talk about stocks each and every single day. So definitely check that out if you guys want to be a more informed investor. And there's also a link in the description in the pinned comment section as well to sign up for Public, where you get up to $70 in free stock just for signing up and depositing at least $1. Anyways, guys, without further ado, let's get right into the top 5 stocks. Alright guys, so the first stock that we have on this list is Apple. So Apple is the largest valued stock in the entire stock market, but it continues to grow, it continues to dominate, and it continues to impress people with their earnings. Guys, Apple almost has like a cult following. If you don't own an iPhone, you're going to be ridiculed by your peers. People are going to be like, oh, are you poor? You can't afford an iPhone, blah, blah, blah. Anyways, guys, in terms of the finance of Apple, it has about a 28.57 price to earnings ratio, which is a bit on the expensive side, but in terms of the overall market, this is pretty normal, especially when you take in consideration the overall price to earnings ratio of the S&P 500 at 33.51 price to earnings. So Apple is technically trading at a discount compared to the overall S&P 500, and it is making an enormous amount of money, guys. And if you guys want to take a look over here, we got this email from public.com, which is another great reason to sign up for public.com, is because they keep trying to inform you guys as an investor, whether it is some announcements, emails. No other company that I know that is this good does this, so this is very good, and it's very easy to see, very clean user interface even in these emails. So they sent a report about Apple directly to my email saying that Apple topped earnings and revenue estimates. iPhone sales surged 50% to $39.57 billion in the latest quarter. Now this is up from quarter 2 of 2020, so these are taking into account quarter 2 2021 sales. And then services revenue grew 33% from a year earlier as a number of paid subscribers across services such as Apple Music and Apple TV jumped to 700 million. So Apple absolutely killed it with their earnings. If we go back to their stock, you guys can see in the past month they are up, and they jumped on earnings, and then there's an overall sell-off, which is why this is more of a buy the dip situation. If you guys think that Apple can make it back to an all-time high, that's basically a free $4 or $5 per share. So that's up to you guys to decide, but I personally am bullish on Apple, and I think before you start gambling on any other stock in the stock market, if you want to gamble on options, if you want to buy a super risky micro cap stock, a penny stock, you should have Apple in your long-term portfolio. That's just my personal opinion on it. Just to illustrate to you guys how dominant Apple is as a technology company, we are taking a look right here at their AirPods business. So you see these AirPods right here, guys, and we're comparing their AirPods business alone, nothing else, to every single other not every single other technology company, but you guys get the point. So in 2020, we're taking a look at the AirPods business. You can see Apple made $23 billion in revenue from AirPods alone. This is more revenue than Adobe makes, more revenue than Uber makes, more revenue than Nvidia makes, more revenue than AMD makes, more revenue than Spotify makes. You guys are starting to get the point here. More money than AMD and Spotify combined, more money than Nvidia and AMD combined, more money than Square, more money than Twitter, more money than Shopify, more money than Snap, more money than about 9 Snapchats. So if you guys understand what I'm saying here, Apple is an absolutely dominant company, and they make an absolutely absurd amount of money, and they have people completely hooked to their entire Apple ecosystem, including AirPods. So they are a technology company that has completely created an ecosystem where if you don't have an Apple product, you're going outside of the status quo, and it just creates an extremely powerful brand, and it's illustrated through just their AirPod sales alone. And Apple makes revenue in many other ways as well. So with all that being said, you guys need to have Apple as a part of your portfolios. Anyways, we're going to move on to Amazon, which is the next stock on our list. And guys, I think Amazon is at least the $4,000 stock. Now, Amazon did not beat earnings expectations in their earnings report, and we can see that right here in this statement we have from Public, and they have the company beat earnings estimates but fell short on revenue. Amazon Web Services, or AWS, their cloud computing business, grew 37% in quarter 2 2021, up from 32% in quarter 1 2021. Amazon also delivered weaker than expected guidance for the third quarter. So people are expecting that quarter 2 is going to be stronger than quarter 3, and other companies said this as well. Their e-commerce giant is now over 200 million Prime subscribers, which is absolutely incredible, guys. They're currently looking at a nice dip. You guys can see, if we're looking at the all-time high, that it hit around the beginning of July at $3,700 per share. We're now sitting at $3,300 per share. So if you really did want to get back into this stock at a little lower price, a bit of a discount since they did not hit those earnings estimates, I do think Amazon is a crucial part of every portfolio, and especially if you guys want to put this in a retirement account such as a Roth IRA, Amazon will be an amazing addition to that. So the next stock that we have on this list is Alphabet Class C stock, or GOOG. Guys, Google, another amazing technology company, and you're starting to see the theme of this video. Now, before you click away, we have more of a wild card stock, a smaller stock that I think has enormous potential to grow, and it's actually the #1 highest weighted stock in my entire portfolio. So stick around to the last stock in order to see that. But for now, we're going to go over Google. Now we're going to go back to this report that we're talking about, and it also has a report on Alphabet. So sales and earnings came in better than expected as Google's advertising revenue increased 69% from the year before. YouTube revenue crossed $7 billion, growing at 83% from 1 year ago. Guys, so Google is an absolutely insane business, and they even highlighted the fact that their YouTube revenue, their YouTube advertising revenue, which by chance is how I actually make a living, has grown significantly, guys. So with that being said, YouTube is a huge underdog, and I've even seen people state that YouTube within Google is kind of like Google having their own Netflix within Google, just because of how much money Google generates from YouTube. So it's pretty insane the amount of advertising revenue that Google has. Everyone uses Google each and every single day. It's an absolutely instrumental tool to accessing the internet, and they are also the most powerful advertiser on the earth currently, completely dominating any other advertising media company. So I think Google is also definitely an extremely instrumental part of any long-term portfolio. If you want up to $70 in free stock just for signing up and depositing at least $1, use the links below in the description or in the pinned comments section to sign up for Public. Public is an amazing stock investing application on your phone that has an amazingly clean user interface, and they are just an amazing platform to use. You guys will see it throughout this video today. We have used some of the information that Public sent us in an email to make better investing decisions, and within the Public app, they have all sorts of information for you to learn as an investor. So if you want to learn more and be a more educated investor while using an app that has an amazing user interface that's very easy to use and very user friendly, then I highly suggest you sign up for Public. If you use that link below in the description or in the pinned comment section and deposit at least $1 into your account, you'll be getting up to $70 in free stock just for signing up. So it's basically free money. Check out those links below, and yeah guys, let's get right back into the video. Alright guys, so this brings me in to the next stock to buy now, which is actually an ETF, FNGS, and this is an ETF that I think will beat the S&P 500. So this is another great addition to your portfolio, perhaps in your Roth IRA or just your long-term portfolio. As you guys can see, FANG Plus, so FNGS, it has the FANG companies, so that stands for Facebook, Apple, Amazon, Netflix, Google, etc. So these are basically all of these companies combined into a single ETF, which gives you guys reduced risk as it diversifies all of these stocks into one ETF, which is awesome. And we'll take a look at its holdings in a minute, but it's up 52% in the past year. Past 5 years, it was actually created in 2019. So it started at $12.36 in November 13th, 2019 when it was listed, and now it's at $31.40 per share. Now, there's always the room for a correction. People have said the stock market is too high. However, I don't think that should deter you from making long-term investments because, well, they're long-term investments. So if we take a look at some of their holdings here, they have Twitter at 12.88% of the portfolio, Tesla at 12.17% of their portfolio, Apple at about 10% of the portfolio, Facebook also at around 10% of the portfolio, Google around 10% of the portfolio, Alibaba about 10% of the portfolio, Netflix about 9% of the portfolio, Amazon about 9% of the portfolio, Baidu Incorporated about 9% of the portfolio, Nvidia about 9%, about 8.5% of the portfolio. So these are all amazing companies that are added to this portfolio. If you guys don't want to invest in this directly, you're also going to be paying, let me add, an expense ratio of about 0.58%. So if you guys just want to take a look at their holdings right here, figure out how many shares of each, allocate it yourself, then you have your own ETF and you're not going to have to pay any exchange or expense ratio for the fund managers, so microsectors won't be making a cut of that each year. I'd recommend just making your own pie of this. You can do that in Public, and then you're owning the stock itself. You're not paying anything else. Two other assets that I think that you guys should add to a portfolio like this would be Bitcoin and Ethereum, because I think those are also kind of like tech companies in the way of how dominant and big they are. So if you wanted to just add another 9% of each of those assets, that's another way to diversify your holdings in this high growth long-term stock portfolio. The next stock that we have on this list is Tattooed Chef. Tattooed Chef is my personal favorite. It's coming in at about 9% of my overall portfolio, but if we're taking in this options contract as well, it is more like 13 or 14% of my entire portfolio, which I guess is a bit scary. I wouldn't recommend you guys put it in anything that's over 5% of your portfolio, anything into a single stock, but I am very bullish on Tattooed Chef. Now, it's up 32% in the past year. It's making like this big bull flag pattern, so I think it's going to break out and reach new all-time highs kind of soon, which would be around $28 to $30 per share. I think it will eventually hit that in the near future just by looking at what's going on with this stock, looking at its fundamentals. It has great fundamentals. Out of all the growth companies that I've seen over the past year, this is definitely my favorite in terms of the amount of money that they make, the room that they're able to grow, their amount of competitors. I just see Tattooed Chef as a completely niche stock that already makes tons of money. And I think that this is definitely something that you want to add into your portfolio. It's going to be dominating in the future. I think this is at least a $100 stock in a few years. That's why it's the last one on this list. And this was definitely the riskiest stock that we have on the list. As you guys can see, the price to earnings is 160, which is a lot higher than a lot of those other stocks that I put. However, guys, it used to be at a price to earnings ratio of 10 at the beginning of 2021, which puts it in a deep discount category compared to its peers. And since it's made other investments in the company in 2021 in terms of expansion and creating new products, its price to earnings ratio has actually gone up. But if you compare that to some of the growth stocks that other people are buying, that is absolutely nothing. People would buy a growth stock if it had 1,000 plus price to earnings, or even if they don't have any earnings, if they lose money for their shareholders. So I think Tattooed Chef is definitely a great company to hold on to for the long term in terms of fundamentals, in terms of the growth value, and I think it's a very safe bet. Anyways, guys, that's about it for the video. But before we wrap this one up, I want to show you guys what basically inspired these stock picks. So it's a quote from Warren Buffett that says, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." So what I mean by this is, if we go to Apple, we scroll down here, this thing has a $2.44 trillion market cap. If we go to Amazon, we scroll down to the market cap, $1.69 trillion. If we go to Google, we scroll down, we look at the market cap, $1.81 trillion. So you guys are getting the point. We go back to the Warren Buffett quote, "If it's better to buy a wonderful company at a fair price." Well, if we take a look at those market caps are all over $1 trillion, you might ask yourself, well, is that a great price? They're all over $1 trillion already. Well, guys, these are all wonderful companies that continue to grow their earnings year after year after year, and they are going to continue to dominate. Each and every single one of us uses these companies, whether it's Amazon, Apple, or Google. The only one I can see you guys not really using is Apple or Amazon or one of those companies to protest them. Like sometimes someone will use DuckDuckGo instead of Google search, but we all know that these companies are absolutely wonderful companies. So even if it's not the greatest price, even if Apple is up 34% on the year, Amazon is up 5% on the year, and Google is up 81% on the past year, you guys know you are buying some amazing companies, and I think that should be your key to investing. Don't look at something just because it's cheap. Just because it's a $1 billion market cap doesn't mean it's going to go to $10 billion in market cap. You just don't know. You need to make sure it is a good company, and I made sure, doing my due diligence, that all of these companies are wonderful companies. And that's not to say to not buy a company just because it has $1 billion in market cap. What I'm saying is to do your due diligence and make sure that you are buying a wonderful company that will make money for you as a shareholder in the future, rather than just buying that penny stock that everyone's talking about on social media because it has a low market cap, a low float, and they think it can go to the moon. I'm not saying to not buy those stocks. I'm saying that you need to have a long-term portfolio built out with some of these stocks before you dip your toes into some of the more risky plays. Anyways, guys, that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something today. I enjoyed making it as always. I'm so happy to be back making videos for you guys again. Make sure you guys leave that like on the video if you guys haven't already. It's always very highly appreciated. And check out those links below in the description or in the pinned comment section for Discord and Public, where you get up to $70 in free stock as long as you deposit at least $1. Guys, that's about it today. I hope you guys have enjoyed. Peace.